Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this is for the evening of June 1st, believe it or not, 2023. Wow, it's hard to believe I'm saying June 1st. Now, I'm not going to go in with the full explanation of what's going on in the markets. One of the things I don't want to do is in my metal report, this report, and my financial markets have to say the same thing over and over. There's no prepared speech. But I'm going to cut back and figure out it's probably going to be in my financial markets where I'll give most of the talk and then smaller versions as to what went on. And this will be the smaller version. The market has decided on its own that Fed Vice Chair, I think it's Jefferson, Philip Jefferson, I think his name's that, and Mr. Harker are right. The marketplace is wrong, that it's time to go into a skip or a pause on Fed rate hikes. The proof that that's what the market thinks was when we saw the ADP numbers come out today, stellar. Market was guessing, I think, 180,000 jobs. They got 280. What does the market do? It started to rally and it never stopped. I mean, that's a strong jobs number. And what did the market focus on? The number that nobody pays attention to, the Challenger Gray. It's a small nothing index. Corporate layoffs. Corporate. Not ADP numbers. Private numbers all over. And that's the one it focused on and said, oh, that fell a little bit. Pay attention. When markets want to do something, they do something. Now, the big challenge for everything tomorrow is how does the jobs data come out? If the number's under or around 200,000, not 240, around 200,000, I think the market says, yeah, the Fed's going to pause in June. Whether they should or shouldn't doesn't matter. That's what the market's going to think, and they'll trade it accordingly. 200,000 is still a monster number, but here's the logic. When we came out of COVID, we were 500,000 gains. Then we started slipping, and here we are approaching a third of those gains. And the market's going to say, you know, the Fed's work is done for the moment. Let's see if those numbers keep falling because there's a lag to all this. With that, the stock market goes, okie dokie. Interest rates are coming down. It's not what they're doing. Interest rates may not go up much more by the Fed, but they control that part, and until they get anywhere and can prove they're getting close to their 2% number or believe the momentum is so locked in that it's going there as long as they do nothing anyways, that would be interesting. I don't think they're at that point in time, but that's me. Who am I? I'm not a Fed president of a regional bank. I'm not a Fed governor. If that's what these guys think, there's some of them that are there. I'm more aligned with Bullard and the others that, no, these are still very strong numbers, but the market wants to go with the naysayers. It's been doing that for 14 months. You heard how many months? Since they started raising rates. The market has believed that the Fed can't raise it too much because it'll tip the economy, and the three broken banks in March were proof that that's the case. That you have to agree with. So the Fed's got reasons to say maybe we don't go any further. And of course, if you get a strong jobs number tomorrow, what will real rates, not the ones the Fed set, what will the market think? That's where you're at. If you look at Google, which is going to be one of the big companies that wins with artificial intelligence, and Apple and NVIDIA, the SOX ETF. You got to look at all these different things, Planter. I can go on and on with the list of companies that will make money off this deal over the next decade. The word is decade. I don't know that they're going to make that money now. We know NVIDIA is, but the others have to integrate, okay? And as you know, the integration is going on. If you look for the hottest part in companies right now, it's people with software knowledge that they can get to go on the AI. But in time, those are short-lived jobs because the AI will teach itself and it won't need those programmers. You do get that because that's where you're headed. Again, this is Star Trek. This is William Shatner. This is Captain Kirk talking to data and the computers are going to be able to do that. Yes, I believe that that's where you're headed. When you look at where the market is right here, you're just churning for the moment. Are we trending? We are not. We're in a churn. Higher high, lower lows. You have a bullish bias as you've stayed over the 18-day average, and the whole thing's lined up bullish. You had a crossover back over here in mid-May, where finally the 100-day average in green that had been well under the 200, the gray line, crossed over, and the market made its move to the upside. Again, all NVIDIA, all AI. When we look at where the market's at, if it wants to break, the 18-day average should offer the first round of support. Here's what I don't like. If you come back with me over here, if you understand what an embedded slow stochastic is, it's when the momentum of the market, it's got the numbers over 80, both. It's called a K and a D line, and they're staying over 80. And you can see that it was one day after the other. And if you get a settlement under 79, and I'll walk you to where you're at, it's off. You got it. You started getting it yesterday, and today was confirmation. It is typically a sign that what's going to happen is price in the 18-day average, or wherever the closest moving average under the market, or Bollinger Band, depends where you're at, are going to likely come together before the market goes through the most recent high or goes up before the most recent low. I teach it in detail in 15 chapters in my enhanced Bollinger Band course. At any point, if you want to find out, you move your cursor up to the top here. It'll take you right to where the course is, and it's all explained for you. Got it? There'll also be an ad at the end of this with that. When we look at Schwab, what are you doing right here? You lost the embedded reading. So going into the report, Google just lost its reading. Schwab is. Google cannot get it back. It has to go through the whole restructuring. This market can get it back only on tomorrow. Again, the course teaches you that. But what should the pros have done tonight? I'll come back to this. Tonight, after this big run, the market is saying, nope, it's time. Game over. If it re-embeds, we'll reconsider how to get long again, but I want to take my money off the table. That's how I teach it. When you look at UGA, what did you have? You had the whole embedded reading. You lost it. Where should the market have made a run to? Let me walk you there so you get a feel for it. Here's the market embedded. Here you're losing it. Unfortunately, it all happened on the same day. You've already hit the closest average, the 100, the 18s, the gravy, and that's what you did. Got it? But you knew you can't be long, so you'd be saying to yourself, oh, I missed getting hurt on the rest of that. You get a day like today, and I'm one of these traders today, and I did not have a good day. I didn't get killed, believe me. But when you get a turn on these momentums that surprise you, you're naturally, if you're a trend trader, going to give back some money. That is part of what trading is about. If you think not, boy, you know, Kramer's always owns all these stocks. I always wonder about them because a lot of them, if you look at them, are so much underwater. You know why? A trade turns into an investment. I don't want to be an investor. I want to be a trader. I don't want to say, well, 3 years from now, this stock's going to come up or that one's going to do that. That's, unfortunately, he's not the only one that does that. Well, it was good then, but do they take a loss? No. It's going to be a good company. Well, you play that game. I don't want to be in that game. In XLF, you can see how the market's down through here. It hit the Bollinger Band. It's already said take money off the table. The trend is down. The market is correcting an oversold condition. Both numbers are back over 30. Tomorrow's the key day in this market. And obviously, the financial services want to see what that jobs number is. That's what I mentioned to my traders in my reviews this morning. Oversold here. Bollinger Band, not a place to be at this point. Yes, the trend is down, but you see tomorrow's reaction to the jobs report. NVIDIA has gone into a stall. Is it still embedded? The numbers are still over 80, close under 79, and a correction should begin. How deep is going to be the question. Wherever that 18-day average is one potential for the market, there's a huge gap in here to be filled. I am not saying it has to be filled. I'm saying when you lose that reading, I think it'll make an attempt to fill some of it at minimum. On stocks, flirting with keeping the embedded reading, just barely. You get a down day tomorrow, this will lose that rating, and so will NVIDIA. I'm not a top picker. It'd be one thing to come out of longs. I am not saying to go short. XHB, well, where did I say yesterday I thought the pros were going to come out of anything on the downside? You're getting your bounce there. Everybody wants to see tomorrow's report. Energy. Energy's getting beat up, but why would you want to be long or short energy going into this OPEC meeting? OPEC, not plus, OPEC can't be happy with Russia. Russia says one thing and does another. It could be the UN deal to broker food out of the ports of Ukraine. The ships can't make it. They don't approve the ships. They're going to cut production. They've cut 500,000 barrels. I read, you don't have to agree with all the stories that are written, and you can argue, say, I don't believe that that's right. I do. How do you ship all this oil, all these amounts, if you're not producing swelling production? That's basically what is going on. Plus, a lot of this production is in Russia. They send a grade of oil to the sea. At mid-sea, they transfer it to a ship. They create another blend of oil, and it's not Russian oil anymore. But where'd they get that oil to do the blend? So OPEC knows this. How are they going to deal with it over the weekend? Because if OPEC itself wants to cut production, well, Russia's not going to. They're in war. They need the money. I do understand that. So they cut their production, and I guess it tries to hold Brent steady. They have less oil to sell. Russia just keeps producing, and even though it's at a discount, they're the benefactor. I don't think that's going to work. They got their hands full. In GLD, where do you think I think the resistance is going to be? Right here. Now, what happened in GLD? Let's you and I take a look. What did the market do? Here is the market yesterday, Wednesday. If it loses the embedded reading, I'm guessing you're going to make a run for wherever the 18-day average is. You got as high as 184.21. Will you make it to tomorrow, whatever that 18-day average is? That average is going to fall tomorrow. Will prices hold steady and go up to hit the numbers? The question. In SLV, you tell me what happened here. We had a market. Let's come back because this one worked out pretty cool. Here's the market yesterday. You lose the embedded reading. You're over this average. The only average that's open to get up to would be here. Oops, I want to come back. I hit the wrong button. I want to finish that up for you. Bingo. Copper just lost the embedded reading today. Just today. My work still says that wherever that 18-day average is, before you get under this, you should get there. Is the market a buy? No. There's a way I'm developing for that. I haven't come to it yet. But this is a reason not to be short. To me, that's a world of wealth. BND, when you lost the embedded reading, right up. But here was the real first objective. The 200-day. This is the gravy trade to get to the 18. Look at UUP. I thought this was wrong. I wrote by accident our charting people and said, you got a wrong quote. Then I went on to other websites, including where I trade and so on. I couldn't believe it. This is the right quote. You fell all the way down to the Bollinger Band and rallied back dramatically. Wow. In the process, you lost the embedded reading. So what happened here? Well, if you look at the futures, they're on their butt. This is on its butt. Market's already hit its targets as it happened all in the same day. FXE, flip-flop. You lost the embedded reading. You haven't hit any average. You should be getting up there, in my opinion, before you get down through that low. So there's a technique here, and I teach you with 15 video chapters, give you the charting software, and included in the course, I want to make certain that you see my morning subscriber video for futures and or the ETF. And you see every day how I instill this in you and how it works. I only show you here a portion. You're not getting the nitty-gritty. How do you get this? It's simple. Follow my finger, move to the top. There'll be an icon up there. Give it a click, and away you go. I'm Ira Epstein. I'll see you tomorrow. I can't wait for the morning update where I will have by that time seen the jobs report, and I'll give you my take on it. Take care now. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.